Welcome to TradeTheMBA.com. This is Jones. Report is for the 2nd of July, and well, we're heading into the soft weekend here, the fourth holiday. And well, of course, Fed chairman here in Europe, and he opened his mouth, and yeah, it wasn't good. Basically, he said that, yeah, if Donald Trump didn't do tariffs, we would have cut rates, and it scared us, so we're not doing anything. What? Like, for real? I mean, the numbers all coming out suggest that he should have already cut rates, but uh, clearly hasn't. Now, as far as market standpoint, yeah, we're just eking along right here. You're not getting much momentum out of this, and that's just because it's faded off dramatically. Sure, you're still congruent with rising shakeout and everything, but now you're into a lofty area with little momentum. It isn't going to take much to cause a retrace into this. Anything coming in unexpected or negative from a beating standpoint is going to really have an impact. So you climb what they call the wall of fear, where it's just incremental, little bit up and down, and it's just mostly intraday trading that you get the advantage from. And of course, options are going to have a lot to do with this. But yeah, this wasn't unexpected coming into a holiday week. So, from an NQ standpoint, did not fare as well, and so that's where we had the divergence. There, you can see the complete shift, but the Nasdaq had been outperforming. So, relatively speaking, they caught up to each other. But there's a bigger concern. Obviously the Musk and Trump battle again. Popping back up doesn't help things because it's just part of this narrative with the whole big beautiful bill, and a lot more spending, a lot more deficits. Though the numbers coming in from the tariffs and how much revenue the government's taking in, pretty staggering numbers. It's going to be a couple hundred billion by the end of the year. That's real money if you're not doing it. But like, Trump's not wrong. If the Fed had just cut rates reasonably, you could save $1 trillion off your deficit. So why leave it where it is? It doesn't make a whole lot of sense unless it's a punishment. And how else can you describe it? But who's it really punishing? It's really punishing the Americans. You're not hurting Trump. You're really punishing Americans and the ability to do what they want, growth, business, whatever, and it all has an impact. Now, from a Treasury standpoint, the bond market, realizes the Fed is behind, and they're going to do what they have to do. What's surprising is the weak demand from foreign currency for U.S. Treasuries, and that, given where oil is, and given the fact that compared to the ECB, you're getting more than double the return in U.S. Treasuries versus the ECB rates where they currently are. Euro's at a record high, dollar's at a huge slump. Why wouldn't you, from a foreign aspect, be dumping money into U.S. Treasuries just from the advantage of the conversion, not to mention the extra percentage points in return? And it's an interesting one, but it just maybe represents a problem that other countries are having as well. China can't really buy anything else because they've got their own economic woes. It's been a huge turnaround for them. They're starting to threaten the EU and other countries to make deals with America if it impedes on, any tariff situation with regard to China trade. So you get a lot of world dynamics happening behind the scenes that are impacting things. But oil not budging from here. It still suggests that there's supply constraints. I think Trump was banking on the fact that he could get peace with Russia, open up the taps, and oil would take a plummet. That hasn't happened, and mostly because of the European EU, because they have fought steadily to keep Ukraine fighting in a war that they're losing dramatically. Don't let anyone else tell you otherwise. It's as obvious as you can see, especially since they continue to lose more and more territory by the day, and that's only starting to accelerate now. And pretty soon it's going to be a de facto situation. They can survive if they continue to battle along. They're just going to keep losing more and more territory as it goes, and the Russians are certainly going to make them pay for keeping this thing extended. And here you have that euro. So the euro is just creating a record dump in the dollar. Now, we're in a cyclical low for the dollar anyway, so there was some fade expected, but we're really watching this 118 level because that becomes kind of a critical tipping point. Usually that would be the bottom end of the channel where the dollar should rally from there. So everyone's kind of like wondering if that's going to be the case, whether this was just a temporary, because the numbers don't make any sense comparative to what the Eurozone is. Everyone, though, is anticipating that these tariffs are going to mean zero GDP in the US, or a negative. And that's really what all of this works out to, is this expectation that the US goes into recession, negative growth, and in a big way. And that's the justification for being prepared and already having gotten out of the dollar. So if that doesn't play out, I think that the dollar is looking at a huge run. At the expense of all the other currencies. And from a gold standpoint, that would not be great for gold either, except for the fact that they had shifted it now for banks as a tier one capital. So that may have been the counter to try and support that. It was an interesting choice of the Fed to make that adjustment. When it comes to your Bitcoin area and that, I don't think that you got, this is just pretty much going to trail with, like, as you can see, it dipped the same way that the NASDAQ did in that. So it's going to react pretty close to that. And again, though, you're still getting a lot of positive elements, at least slowly working through. For ETH, some of these other crypto things are trying to create trust banks and stuff. So at least it's a friendlier environment from a crypto standpoint. Whether that will materialize in significant bounce for some of the in-between ones, not as much, but Bitcoin has definitely been the favorite. You can see how we were just pretty much sideways for most of the day. We had the NBI white spike, didn't move down to the 50%, and we got right at the edge of the 23. It literally showed a significant amount of buying coming into this late here. Will it be able to hold up? Just depends on if that MBI weight stays down that low. But the next MBI weight spike, we would expect to see that kind of fill back. So we'll be keeping an eye out for that one, because the one that took place from the previous day, it filled up over pretty close right to there under the magenta weakness. So again, this is going to be kind of rocky, I think, going forward. I mean, obviously, once we get past the holiday, things will be clearer. But a lot of this little subtext that you got to pay attention to, because at the end of the day, it's really starting to add up to where the viewpoints of these people are and why you're seeing what you're seeing. To a lot of people, it doesn't make sense, but when you look at it from the aggregate of all that information, the expectation is for very ugly numbers for the U.S. economy. And if that's the case, and we don't see it materialize, then you've got a huge upside potential that is sitting there unknown at this particular stage. So that's why we just have to watch the numbers, and it's going to be an interesting one to see play out. I still think that the U.S. economy holds off just fine, and as people get liberated, but really that oil has to come down to make it a clinched deal at this particular point. I think we're sort of right on the bubble. It could go either way. So we'll keep it focused, and as always, anything relevant, I'll put it in our team chat. Have a good one. Trade well.